All right, welcome everyone to Technical Wednesday today. It's not going to be Technical Tuesday. I had something come up yesterday. I was actually spending a good amount of money, which I made all back to last night with my trades. Those that saw on my Instagram saw that all the profit and stuff kind of made it a little funny there. But yeah, today's Wednesday, the 28th, 2020. Let's go ahead and start Technical Tuesday and take some notes for those of you guys that want to learn some of these tactics. So first things first, going to be looking at what's going on with the economical news. Not that I'm a fundamental trader, but it's part of what I see to just see if there's any type of high impact on a certain currency. JPY tentative. Okay, so getting into the London session, I see all day medium or low impact here. So again, another day where there's nothing during the London session, but still going to be checking out the London pairs like Euro, GBP, see if there's anything there. But we do see some high impact at the open of the New York session. You can see high impact for USD, some medium impacts here. We have some high impact on Euro at 545. So it's going to be very interesting for the Euro USD pair during the beginning of the New York session. So I'm going to be analyzing now, and maybe I might spot something where I'm looking for during the London session. And if I don't see anything, then I'll just wait towards the New York and be able to find a pair there. Okay, so looking at all pairs now. We'll get into the GBP, JPY later. For now, going to be looking at Euro USD, see what we see there. Okay, so I'm going to erase my chart so it's not so confusing here. I'm going to show you guys the full breakdown. Okay, so overall in the daily time frame, we can see that it was once at a really high point up here, and then it's looking to start going into the downtrend. We can see there was a strong high uptrend, gave us this like head and shoulder pattern, drop down. So overall, we kind of see right here that it broke this trend and possibly going into the downtrend, even though if we see some higher highs, higher lows, so going to trap the price here. Okay. So going to get that resistance just to see that there. So currently right now, price is at this support area. It's kind of in a confusing area just because on the daily, we kind of see it was a strong uptrend, but it did like a lower low because of these lows over here, lower low, but then it did a lower high and then a higher high. So it's very, very confusing there if it's going to continue dropping down or continue going up. So right now, just looking at this area here, we can see some reaction. I don't see any reversal pattern. We see like on the 1 hour, it's lower lows. Don't want to place a buy here just because it's not giving me anything confirming just yet of my technicals where this is going. And by the way, if there's any currency pairs that you guys want me to look at that maybe you've had an eye on, but you kind of want an extra confirmation, you can post it in the chat area for those that are here live. All right. Okay, so ADCAD kind of showing the same exact thing that we see with Euro USD as far as a bigger time frame, super high uptrend. Then we notice this area where it's didn't want to break this resistance area and then started its reversal on this side. Okay, so from what I see, it's going into the downtrend. We see like lower lows. Right now it's at that lower high area where it's expected to reverse. So I'll show you guys what I do there. I can already tell here if I was to do my fibs from here, this 38.2, okay. This main point to this one. All right. Getting my fib zone between 50, 61.8. Going smaller. Okay, so with this here, in a way, this is kind of creating like a left shoulder head, right shoulder right, where that resistance on the downtrend's at. So this is that right shoulder right there. Hasn't really shown that it broke through the neckline. But anywhere below 38.2 is going to be that selling point. If we look at here, I would target this area for a sell down to the 38.2, I mean 23.6. And let's see. So these are one of the trades that I actually like seeing just because of where we're moving with the trend. Like on the smaller time frame, this is where a lot of people get this wrong. They see on smaller time frame that this is going in an uptrend, but then it's starting to show signs that it's going into the downtrend right here. We see the high, we see lower high, and then right now, it's not breaking any higher. It's like rejecting off of this. We're just waiting for this to get in for a sell. Thank you for whoever mentioned that. I didn't see this. Not that I didn't notice it, but I didn't. Well, I guess technically I didn't notice it because I didn't look at this currency pair just yet. But yeah, we're definitely going to be looking for a sell on this one once it drops down, getting good risk to reward. The chances of winning this trade going all the way down here is going to be pretty high. And also because previous support over here, price is basically coming down, coming up, hitting like resistance, double resistance, and then looking for that sell. On top of that, we see on the 1 hour, we see divergence. Last week, I talked about divergence on the RSI. If you didn't see last week's live analysis, I had that training, but it covers over the RSI and how to use it. Those that remember know that this is divergence. As we see, this is forming higher highs over here. It's giving us the confirmation that it's overbought. Price is expected to reverse. So we're just waiting for this to drop down. Chances of winning this trade is really high, but we should notice that it's most likely going to, just because of price, it's most likely going to hit this 0-0. Really high chance of it hitting the 23.6. Less of a chance hitting the 0-0, but there's still a high chance because we see on the bigger time frame, it's doing lower lows, lower highs. So it is expected to drop to the 0-0, and then a fewer chance of it going all the way down to negative 27%, just because this is a previous support right here. So it might hit here as support and then bounce off and kind of consolidate through here, and then maybe start its reversal. So here's a tip here to get down. Normally for trends, you are going to see 1 point, 2 point, and then the third point is usually the final point until you start noticing that reversal happening. That's where you notice like the double bottoms, triple bottoms, inverted head and shoulders type of stuff. For inverted head and shoulder, we might actually notice it do something like this, where it drops down, negative 27%, comes back up, probably hits that resistance area, comes back down to where it was previously the 0-0, and then it starts its reversal going into the uptrend from there. Just a quick tip for those that haven't noticed. I see Andrew mentioned that you never noticed that. Yeah, keep in keep an eye out for that. And this is mainly for like actually I see this on smaller trends too. I'll actually show you guys some examples here. But there's a reason why the number 3, you'll notice the 3 a lot, like triple top. There's a reason why it's triple top, and we don't really talk about quadruple top. I know right here actually happens to create a 4 top, 1, 2, 3, 4. Usually it doesn't. 3 is usually the max. 4, it happens sometimes, but not as much as 3. Same thing with like inverted head and shoulders. It's usually 3 points: left shoulder, head, and then right shoulder. So yeah, you usually see 3 pushes, and then it starts the reversal. Let me see if I can spot anything, but I can't really see on the 1 hour here. 80 CAD's a little choppy, and a lot of these areas kind of consolidating sideways. Okay. But anyways, just keep that in mind. It's something to just have in your brain. You don't have to. You don't have to like. Well, you can write it down, but the memorizing of it, that's something different. By the way, we see right here. We see. Anyone know that candlestick pattern that we see here, or that it's forming? It hasn't closed this one yet, but it's kind of like in that area where it's forming. See in the chat area. It's like shooting star / evening star. There we go. So Raj got that right. But we can already start seeing that it's reversing now. There's one of these methods that I use for early entries. This is more on the riskier side, but because we see that it's already starting to reverse, I can go down to the 15-minute time frame and get in for a sell when price drops below 50% area. So we can see price already dropped down. So the chances of it coming all the way down to 0, 0 is going to be pretty high. But I chopped the price even more. This is more like scalping, but it's better for these entries all the way down here, getting in over here. This is just more quick pips. Okay, so going on to a different pair. By the way, the reason why I make it look easy is because I've done this so many times, over and over. It's actually really easy. It's not that complicated. And if the currency that you're analyzing looks complicated, then I suggest not to get into that pair, just because you don't see any valid trade. Don't rush into a trade. If you're analyzing the chart and it looks very clean, kind of like AED CAD, like it'll look messy if I'm on the 15-minute time frame. That's why it's best to like see what's happening overall and like try cleaning up your charts as nice as possible. So usually I don't have all these lines. It looks much cleaner than this, but I know it's expected to drop. So when I'm doing all this, ready there. So you guys can call this for signal somewhere around entry at 0.93660. By the way, many times from these live analysis, you'll notice if we look back into like future time, or some people that are on YouTube right now that are looking at this this live analysis, or it's not live now, but if they're looking at it at a later time and they look at this currency pair from the time that I placed it, they'll see that it happened exactly the way that I mentioned, or maybe it didn't break fully through. Sometimes price will come down, hit this area, and then shoot up, so it doesn't break through. So this type of trade would be a pending sell stop order. But let's look at other ones. Sure, this one's going to be there. I'll show you guys. Let's see if you guys want to see the Euro JPY. The Euro JPY trade that I called out that hit take profit 2, hit 120 pips. You guys want to see that? No, I don't want to show you guys the secrets. It's never mind. You guys have to purchase training to know the secrets. I'm just kidding. I'm joking. Euro JPY. I'm a little funny sometimes. If you guys notice, I should be a comedian. But okay, let's see here. Euro JPY. So the trade that I had called was Euro JPY. It hit take profit 2, 1400, which was, there's instant one and then there was a long-term one. Kind of took a while just because it was a long-term one. Is this one at 122.550? Yeah. Yeah, this one's it right here. Text. Looks weird how the line comes out there, but okay, so the entry was at 123.950. I see right here 123.950. And this is on a daily, so it was called out somewhere over here. Got to remember my analysis sometimes. But strong resistance area. Let's see if I can remember else here. Okay, so there's a support there. There's a strong resistance that it was hitting off of. Euro USD was hitting off of this strong resistance line right here. And then the early entry was when price was here. Price had already hit off of that 5061.8 area right there. I believe on the 1 hour. Yeah, it's below like the 0 area. Had hit off of that. So the sell was all the way down and the target was around that 550. Was take profit 1 was around that 550 area. And then take profit 2. Where is it? Take profit 2, 122.550. Take profit 1, 123.050. So 050 was at negative 27%. So there's a really high chance of it hitting just because it was already starting its reversal. And on top of that, on my MT4, I'll show you guys what I saw here. Give me 1 sec, I'm on another screen. Okay, so for this one, I was going off of the daily. If you can see, the daily had a 3 over here. Price was hitting off of this resistance area, plus it had the 3 over here. Usually when you see the 3s and it's already starting its reversal, it comes down, comes back up, and then starts its reversal. Now that I just remember now, I didn't just have the fibs in this area. I also had it on the daily time frame, right in this spot here. So that's where price hit at that 5061.8, where it hit twice, 1, 2, and then it started its reversal. Okay. Yeah, Euro JPY might go back up a bit. And then continue dropping down. But as of now, it broke through the support. So we should be seeing it drop even lower to like this negative 27% on this bigger Fibonacci. Usually it's rejecting off this support. So we're just kind of waiting for it to break through, hit negative 27%. Usually it breaks through negative 27% and then comes up hitting like resistance at that 0% and then continues dropping down. Okay. I also want to teach you guys something today, something new. So whatever you guys want to learn, I'll just kind of go off of what you guys want to learn, and then I'll just pick a random one or whatever I feel like teaching. You guys saw this USD CAD trade that I called out the other day, or it was yesterday. USD CAD, called this one out. It hit take profit 2, no drawdown. So that one was where is it? USD CAD instant buy order. It was at that 950 area. This is the exact trade right here. This was take profit 1 was at negative 27%. Take profit 2 was at this negative 61. The reason why I aimed for this area as the area to target was because if you see this kind of giving like a left shoulder, head, right shoulder right here. Neckline is like this trend line right there. So usually from there, you do see it break and then hit all the way up there, which it did. It broke through and then it actually did its retest. So I didn't get in right when it broke through. I got in when it was retesting. So I knew it still had some ways to go. Usually for these reversal patterns, you don't see it go straight to the take profit. You usually see it break through, do its retest, and that's where like another entry can be made if you're doing it the right way with proper risk management. But for this here, had my support here, very nice, did my fibs from low to high, PRZ area between 50, 61.8 area, price hit, rejected, and was going into the upside. Now, my entry for this buy right here was because it was right at London session at the open of London session when I called this, and it was trapping the price even more. I did notice like that left, it was like a left head, kind of like right shoulder that formed right there. I already knew that it was expected to go up just because I noticed that it was giving some really strong action going up during the beginning of London. And the chances of winning this trade, just because I'm going with the trend, is high. We see higher highs, higher lows, starting its reversal. We don't get in right at the low, even though if it would have been nice all the way down here, we get in once we have the confirmation for the reversal. And so it skyrocketed all the way up past where I expected, negative 61.8. Went even higher than that. And it looks like it actually went up to this high right here, this resistance line. Okay, so let's look at what you guys want to learn today. Give you guys some more knowledge in this live analysis. Sometimes I repeat some of the stuff that I've taught. I don't mind that. I've done it over and over again, with the live analysis. So I'm used to teaching the same thing. I'm not going to teach the same thing that I taught last week. So that's something I won't do. Just want to thank you to know that I'm grateful that you take your time to teach us these skills. I'm grateful for the signals, your time, and authenticity. Thanks, Joshua. Appreciate it. Fibs. Okay. It's been a while since I've done fibs. Fibs is really advanced. So I know there's a lot of newer traders in here. This is taking it at an extra level. But if you guys want to learn fibs, then we can go into fibs. Fibs stands for Fibonacci. Okay, one person said yes, please. We have 107 people in here, so if I see at least 100, then we'll do it. I'm just kidding. Cool, someone all the way from Pakistan. That is pretty far. I was in Dubai like last month. It was probably a bit longer actually, but really cool. Cool, so I'm getting a bunch of yeses. Yes, 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 cool. We will get into Fibonacci then. Fibonacci, it's game time. Before we get into Fibonacci, I want to show you guys a video, not because I want to waste your time, because I want to show you guys what Fibonacci means in a different version. Let me find the video real quick. Give me 1 sec, you guys. Fibonacci. Fibonacci. All right. And those that do already know Fibonacci, you might learn something new. So it's always good to be in here, stay in and learn here. Okay. I'm gonna start this video real quick, showing you guys what Fibonacci is, just because I don't want to get into the technical stuff. I personally feel like these people in this video took a lot of time into creating it, so that's where I feel they can explain this part better than me. Okay, so I'm gonna start recording. Let me make sure the sound's on. Sound. If you guys can, put a 1 in the chat box area if you could hear. If I see like a couple of them, I'll just mute myself real quick. Ready, go.
Math wasn't made up to harass English majors. It was invented by a little something called nature. And it's everywhere you look. In fact, there are specific numbers that we see in nature all the time. Together, they're called the Fibonacci sequence, and it goes something like this. 1, 1, 2, 3, 5, 8, 13, 21, 34, 55. You may know this pattern. The first and the second add up to the third, and the second and the third add up to the fourth, and the fourth and the fifth add up to the sixth, and so on. The sequence was first described by mathematicians in India about 1300 years ago, and it was introduced to the West in 1202 by Leonardo of Pisa, aka Fibonacci, who is also responsible for introducing Arabic numerals to Europe, which, yeah, if he hadn't done that, we'd still be counting in Roman numerals, which would be terrible. Fibonacci was a mathematician, and in his book Liber Abaci, he described this sequence with the thought experiments about a family of incestuous bunnies. If you put one boy bunny and one girl bunny together, that's 2, and those 2 together will make a third, and those 3, when they're done, taking turns, will make 5, etc. But the easiest place to find these numbers in nature isn't in bunnies, it's in plants. If you cut a banana into slices, you'll see that it has 3 distinct sections. An apple has 5. No matter what kind of flower you're looking at, chances are it has 3, 5, 8, 13, or 21 petals. Rows of seeds in sunflowers and pine cones always add up to Fibonacci numbers. Now, plants don't grow this way because they're receiving some kind of mysterious cosmic mandate. They're doing it because it's the most efficient way to pack as many seeds as possible into a small space. And if you want to see why that is, you can go watch Vihart's video, which is linked in the description, and it's awesome. But in addition to the numbers themselves, you also see the same ratio between Fibonacci numbers showing up. See, when you divide almost any Fibonacci number by the one before it in the sequence, especially the larger ones, you get the same number. 1.618 ... well, lots of numbers. The Greeks discovered this long before Fibonacci, and they called it phi. Today, it's sometimes known as the golden ratio. Phi was purportedly used by the ancient Greek sculptor Phidias to illustrate the idea of physical perfection. He's said to have used phi as a ratio between a statue's total height and the distance from the bottom of its feet to its navel, for instance, and also the length of a face divided by its width. There's a whole other set of patterns in nature that are based on what's called the golden rectangle. rectangle. A rectangle whose side lengths are successive Fibonacci numbers like 8 by 13. This rectangle can be divided up into a series of squares whose lengths are also successive Fibonacci numbers, in this case 1 by 1, 2 by 2, 3 by 3, 5 by 5, and 8 by 8. When you draw an arc from one corner of each square to the other, they join to form a spiral that resembles many of the spirals we observe in nature. From the unfolding leaves of a desert succulent to the arrangement of those pine cone lobes and sunflower seeds and the shells of some snails. The math, you guys. It can be beautiful too. Thanks for watching this episode of SciShow. If you would like to get in touch with us, leave suggestions or ideas, we'll be in the comments below or on Facebook.
Okay, so that was that there. Let me show you guys one final one, and it's not going to be too long. It's part of this this one video training here.
Today's going to be a very exciting tutorial because we're going to be talking about Fibonacci numbers, and they involve a lot of mystery, and we're going to have a lot of fun. So, Fibonacci levels. So who is this person Fibonacci? Well, the real name of Fibonacci is actually Leonardo of Pisa. Fibonacci is kind of a nickname which he got, and most likely it meant a good son was born. He lived in the 13th century, and he's most famous for his Fibonacci sequence. So what is this Fibonacci sequence? Well, let's imagine a sequence of numbers which starts with the number 1. The second number is also 1. And then going forward, every next number is equal to the sum of the previous two. I'll let you guess. Let's quickly plot the number 1. 5 divided by 3 is 1. The number 1 and number 2 on a horizontal axis. Now what we're going to do is we're going to go through the sequence and take every number of the sequence and divide it by the previous number in the sequence and plot our answer on the same axis. So 1 divided by 1 is equal to 1. We've plotted it with an orange cross. Now let's divide 2 by 1 and we get 2. 3 divided by 2 is 1.5. 5 divided by 3 is 1.666. 8 divided by 5 is 1.6. 13 divided by 8 is 1.625. 21 divided by 13 is 1.615. So you kind of see where this is going. The crosses are getting closer and closer to one specific certain number. And that number is 1.6180339, and so on. And this number is known as the golden ratio, which is usually represented by the Greek letter phi. Phi is equal to approximately 1.618. Alright, so by now you're saying, Kirill, you're boring me with all this math. What's the purpose? What's the point? Well, let's have a look at some of the examples of where you can find the golden ratio that will probably blow your mind. First of all, if you measure the distance between the edge of your fingertips and your wrist, and then you measure the distance between your wrist and your elbow, it will be approximately 1.618. Go ahead, pause this video and give it a go. You'll be surprised at how accurate this is. Next, your fingers, actually, your phalanges on your fingers actually are in the same ratio as the Fibonacci numbers, so 2, 3, 5, 8. If you don't believe this picture, then here's an actual X-ray. Also, if you take any starfish and you measure its base and take it as a 1, then the distance between these two limbs will be 1.618. Now, if you want to get even to more depth, then we'll take the Fibonacci spiral, and you can read about it separately, but it's basically constructed of Fibonacci numbers. And you can find the Fibonacci spiral in many places in the world. For example, a lot of shells follow the same pattern as the Fibonacci spiral. Some galaxies, not all of them, but some spiral galaxies also follow the golden spiral pattern. So it kind of makes you wonder, how come the Fibonacci ratio can be seen in so many parts of nature? Let's take one more example. Let's take the human DNA. And if we measure its width and its length, then they will be exactly 21 angstrom and 34 angstrom, where angstrom is a unit of measurement for various little things. And if you recall, 21 and 34 are actually in our Fibonacci sequence. A coincidence? Maybe. But that's quite a lot of coincidences. And moreover, what's not a coincidence is that There have been experiments that have proven that figures and patterns following the Fibonacci ratio are much more appealing to the human eye.
Okay, so I'm getting bored with this guy talking. Oh, this was, I guess I just needed to wait a little more because this was the part that that I want you guys to see from this video. Gonna start it now.
If this is a just a random Forex chart, then very often you'll find that if you measure the distance in of your trend, so the main part, the upward part, and then take it as 1 unit, and then you measure the distance that the price traveled during the retracement phase, you will often notice that the retracement is equal to 0.618 units. Now the best part is that if you divide 1 by the golden ratio, you will get 0.618. So this basically means that if you take your original trend as 1.618, then your retracement will be 1. So basically you see the golden ratio here. We'll just return back to 0.618, which is the inverted golden ratio. So how can you use this in your trading? Well, let's assume that we don't know any of that. We know that there's been a trend and we can see a retracement is starting. Well, now knowing about the golden ratio, we can predict that with a good chance, the retracement is actually going to go just exactly up to that 0.618 level. And that means we can enter into a sell order somewhere over there, and we can enter into a buy order once the retracement has completed, knowing that there's a high chance that from here on the trend will continue.
Okay, do not listen to that part that he just said about selling right here. Okay, he's probably not a successful trader, and I'll kind of get into that portion, but I'll take over here with showing you guys the next portion of the Fibonacci. Okay, so basically you can see that we have this trend movement, and he described how from here to here is equals as 1. It's actually this bottom point right here would be equal to 0%, and then this very top would equal to 100%. So I'm going to show you guys on the actual charts, not show videos anymore, what that looks like here, and I'll real quick show my charts, my exact settings. But to add this onto your chart, it's going to be on the left-hand side, which, by the way, most of these tools on the left-hand side are price action tools. So Fibonacci is part of the price action. I mentioned in my training that price action is going to be the primary focus. Secondary is going to be indicators. So this is not an indicator. This is price action. Fibonacci is pretty crazy. You saw the whole, like, the fingers and how it adds up and spirals, like a perfect spiral, or even your ear. Now, there's some interesting videos out there with Fibonacci and like God's finger. Like some of you guys probably saw that if you've ever researched Fibonacci. But to add this onto or to activate the Fibonacci tool, you just go on the left-hand side. It's going to be this third one here on TradingView, and you want to look up Fib retracement. Fib is short for Fibonacci retracement. And I think one of the shortcuts was Alt F. And there's 2 clicks to add this on. So it's the first click, which activates the Fibonacci, and then the second click, which you drag the mouse and you place wherever you want the second click to be. I'll show you guys exactly where it's supposed to go to, but just spreading it out so you guys can see the numbers clearly of what I have here. Or I'll flip it around just because of this here. But it goes from 0%, if you can see at this very bottom, 0%, and then the other point is right here at 100%. So from here to this point, it's 0 to 100. And then everything in between, from 0 moving up, it's 23.6, 38.2, 50% area, 61.8, which was that golden ratio. As you guys saw, the 0.618, this is 61.8, 78.6, 88.6, and then 100. So these are the main ones that are in between. Then I have some other ones up top. This is getting more into advanced stuff. I kind of don't want to, it would take a while to discuss these, but I'll discuss all these other ones below. Below here, we have negative 27% and negative 61.8. So real quick, adding the settings, you guys can take a screenshot of the exact settings that I have, or you can rewatch this video and pause it, take a note of these that I'm using exactly. You will have to adjust it if it's your first time using the Fibonacci tool. Some of these are a little different, but make sure that the ones that are checked you have on your chart. It doesn't have to be in order. As long as you have all of these and the exact numbers on there, then you should be fine. I keep the trend line added on there, which is this little line right there. And then another thing that I add is the levels. And make sure this is percentage. Sometimes it's put as values, so that's percentage. And the labels on the right-hand side. And that's about it. So once that's there, it should look exactly like this, where it'll plot it out. And okay, so the Fibonacci tool, what it's used for, and it's mainly used for. Let me go into a blank area. Okay, there we go. It's mainly used for what's called PRZ, looking for the price reversal zone. So PRZ stands for price reversal zone. So when the price is going towards a trend, so either a downtrend forming lower lows and lower highs, you usually see this for a downtrend. You see it's going lower low, lower high, lower low, lower high. With Fibonacci, you're plotting out your PRZ area, which you get the high to the low. Once you notice that it starts reversing, now for this part here, you have to understand price, the basics of price action and lower lows and lower highs. So this is going to be a little complicated if you don't know, but you're looking for you're looking to see how far up the price will go to. And usually the price will go up to this area in between 61.8 and 50% area. So I draw a box in between here just because it doesn't always go all the way up to 61.8, like exactly on this area. It sometimes is like in between the middle of this box and then starts its reversal coming down. So what you're doing with PRZ is as it's coming up and the Fibonacci, you're looking for this area to get in for a sell because you want to go with a trend. Now, on the video, he mentioned sell right here. That's against the trend. That's catching it for like a short little sell. My method is the trend is your friend. So you want to go with the trend. It's common sense, but for that guy, I guess it wasn't so common. So because you want to go with the trend, or the reason behind going with the trend is because your chances of winning a trade that's going in a downtrend, if it's going in a downtrend, your chances of winning a sell trade, sell meaning that you predict the market's going to go down, is going to be higher. So that's what Fibonacci is for. It's so you can spot when it's temporarily going into an uptrend, finding its reversal area to then continue going into the downtrend. Now, PRZ, it changes. It's based off of how low this goes. So sometimes the low can drop like super low like this. And as you start seeing it come back up, your 0% is going to be at this lower point. So you're connecting this high, which should be the 100%, and then this low. So for a downtrend, the 100% should be at the top, and then the 0% should be at the bottom, because we're looking for this to come up, and you can see these levels here, and then come down. Now for these levels right here, you see 50%, 38.2, 23.6. This is where it gets a little bit more complicated. And usually this is why I take more time to describe this. Usually it's like a 2-hour training where I specifically discuss Fibonacci. I'm trying to get through this as fast as possible so you guys can understand. But when it hits 23.6, the reason why I have this color a little bit lighter of a black, you can see these are like dark black. This one's a lighter black. The reason for that is because if price comes up and hits here and reverses coming down, I don't count this as a high. So this is not considered a high if it hits 23.6 and then reverses. I would, once it reverses and goes even lower, I would wait for this to come back up, and I adjust my 0%, the 0% on the fibs to this low right here, and waiting for this to break through the 23.6. Once it breaks to the 23.6 and hits 38.2, 38.2 is an area for where you usually see an aggressive reversal if the price rejects off of there. So if it hits 38.2, there's usually a really strong reversal coming down. Now let's say if it hits 38.2 and it's an aggressive reversal, the 0, or this bottom of the fib should be, it's a support area, so it's a strong area to where price is most likely going to hit. You're most likely going to win this trade once it comes down and hits here. There's a chance that it's going to reject, so you're taking the chance if you go any lower. But if it does break through, then the next target is going to be this negative 27%. And if it breaks even further from that, the next target's going to be negative 61.8. Now let's say if price came down, hit this negative 27%, and then reversed coming back up, then we adjust our Fibonacci. So we would get this new high that passed the 23.6, and we would put the 100% at this new high, and then we put the 0% at this new low all the way down here. And I always draw that box in between 50 and 61.8, just because that's a really high area where price is expected to hit it and then reject, continuing the downtrend. So that's what Fibonacci is for. It's to be able to spot certain areas where price is coming up and expected to come back down just because the trend's going into the downtrend. Now, the same way that this is that you're using Fibonacci to go into the downtrend is the same thing when you're going into the uptrend, except your Fibonacci is going to be different. So for uptrends, you see higher highs, higher lows, higher highs. And as we see this coming back down, the way to do the Fibonacci there is you get the higher low to the higher high up here. And now the Fibonacci is backwards. So you can see, just let me delete that. You can see the zeros now at the top. Previously for the downtrend, the zeros at the bottom. For this one, the zeros at the top, the 100 is at the bottom right here. And the reason for that is because as we see the price coming down, if it hits 23.6, it's not considered a higher low. Let's say if it goes higher than that, then we adjust the 0% to this other high until it passes 23.6 going all the way to 38.2. Then it's considered this area here is considered a lower high. Well, once we notice the reversal. So as it's coming down, 50, 61.8 is going to be the area to mark off. And we're expecting price to come all the way down to around this area and continue going into the uptrend. Okay, so yes, someone asked if I can show a couple of examples on my charts. Yes, that's, I know right now it's lines just to make it easier to see it through the lines. Candlesticks can make it a little bit more on the complicated side. This strategy is already complicated. So, you know, it's not easy. That's why I've warned you guys before I started that this is more for advanced traders that already understand like the basics and are getting into the advanced strategies. But you're going to notice that it's constantly, you'll see these areas where when price comes up and as it's coming back down, we adjust the 100% at this new higher low, and then the 0% at this new higher high. And as the price is coming down, we have the box between 50, 61.8 area because price is expected to usually going to hit here and then rejecting up. So this is one of my price action strategies that's more advanced. I also mix this with like support and resistance lines, both trend line and horizontal. So it's a really, really good, useful tool to be able to understand when to get in. Now, for those that know this strategy already, this was an extra tip that some don't know about it and how I go about it. So usually when price hits that area between 50, 61.8, and it starts going into the uptrend, I usually have my entry above the 50% area and my take profit at least to the 0.0, sometimes negative 27%. But 0.0 is a more secure one. I keep my stop loss below 61.8, so it's always good risk to reward. And my chances of winning this trade is really high. Same thing for when it's going into the downtrend. I get in for a sell below the 50, stop loss above 61.8, take profit at the 0.0, and sometimes even lower than that. Usually the 0.0 is where you notice I'll have like take profit 1 for signals and then take profit 2 at negative 27%. So let's look at the actual charts and I'll show you guys how that looks like, and then we'll be getting off here. Don't want to take too long on this lesson here. Where's the charts? There it is. Okay. So I'm going to go ahead and erase everything. Zoom into the chart. And I'm going to spot an area of a good flow of a downtrend. So right in this area, we see lower low, lower high, lower low. It was lower than this previous low. And then we can see price come up. And as the price is going up, that's where we can do our fibs from this high to this low. And if I zoom in there, I normally draw my box in between 61.8, 50% area. We can see price came up to this area, that 50, 61.8. If I was to place a sell on this one, below 50% area, stop loss above 61.8, take profit 0.0 or negative 27%, or you can see this one hit exactly at the negative 61.8, came up. Fibonacci also kind of plays as like support and resistance areas. So you can see how it'll like hit here, bounce off of here, and then it'll just do its thing. So that's one example of another area. Now we can see price comes down. Let me erase this. It's complicated. So price comes down and then it comes back up. So then as it's coming back up, I'm looking for the new PRZ. So I'm adjusting my 100 at this new high, the 0 at this new low. And this is what I mean as far as when price does not come up and pass or hit the 38.2. This one hit the 23.6 and it didn't cross through. So I do not count this area as a high, as a lower high. I'll put an X over it because I don't count that. I move it even lower. Let's say right here there was a slight reaction, but it doesn't even hit the 23.6. Now this is the area where there is it does pass above these areas over here. It goes all the way to 38.2 and even higher. If I was to draw my box in between 61.8 and 50% area, we can see it does hit it and then it starts its reversal. But this one, yeah, it's really, it's a really like it consolidated and then it dropped all the way down. But you can see that it dropped down past negative 27% and even lower. But as it was doing the whole drop right here, sometimes you can also spot Fibonacci inside of Fibonacci. So like as we see this Fibonacci here, we can see right here, lower low, lower high, lower low, and then price comes up. So I'm going to get this high here to this low over here. Basically hit off 38.2 and it was like an aggressive reversal. So you can see it spiked and shot all the way down and hit this negative 27% area and then came back up. As it was coming back up, that's where we adjust the fibs, 100% at this high, 0% at this low. This one passed the 61.8, but I still draw my box in between this area because you can still get in a sell when price breaks above. You get in for the sell when it drops below. Stop loss above here, take profit at the 0% area. And your chances of winning this trade is high, especially if you have multiple confirmations like resistance. Resistance, there could have been like divergence in this area too, which there was some divergence. It's just adding multiple price action confirmations. So that's what it looks like for a downtrend. Let's look for an uptrend. This area here, we can see price shot up, came back down, low to high. Now, actually, this one is different because previously this is like the lower low, and we're expecting a lower high right here from what we see, so that doesn't count. Because for this one, we would actually be looking for this. So not always does it drop down to the 0%. We can see with this one, it didn't drop. Even though if it hit this area, it didn't drop all the way to the 0. So there could have been like a strong news reaction that pushed the price up and hit this high over here, and then a reaction. So this confirms that it's reversing, going into the uptrend. So once we see that it's reversing, we just adjust the fibs depending on where it's going. And we can see here, price dropped down, hit the 61.8 area, and then shot up into the uptrend past 61.8. So yeah, this strategy here does require like a lot of practice, a lot of back testing, getting familiar with it. Because for me now, it's a lot easier to spot these areas where it's expected to reverse. But when you're just learning it, it's pretty difficult to get down. It's just practicing, just seeing seeing how the market flows. But once you have these exact settings and look for that area of 61.8 and 50% area, you know that it's expected to reverse, and you just add the multiple confirmations for the sell, which USD CAD was a good sell here, and then a good buy here once it broke above. You can see higher high, higher low. This was my confirmation earlier for a buy. For the signals, it was between 50, 61.8, and saw this skyrocket past negative 61.8. Okay, so anyways, that's it for the Fibonacci strategy. Do you guys have any questions? Anything here? I see a couple questions. With TP2, would that be negative 27%? Yes, TP1 could be 0%, and then TP2 negative 27%. And then if you want like a take profit 3, that would be negative 61.8. But you're going with the trend. So I would say another tip is I mainly use the Fibonacci on the 4-hour time frame. So wherever you see the trend going on the 4-hour time frame is mainly where I use the fibs, and it's really, really simple to get down. I'll actually show another chart here. Just anywhere where you see like a high and then lower low, you just mark off your areas. And if you mix it with an extra confirmation, like right here, it's giving us like a 1, 2, kind of like a triple top pattern right there, neckline right here. Sell would be better in this point here. Your chances of winning this trade is going to be really high just because you see that it's around that 61.8, 50% area. It's expected to create the lower high. Supports on this side right here. Divergence, like there's just so many confirmations that you can add on to your trades, but it's going to require practice, training. Obviously, this is part of the training, but if you want more extensive training, definitely like the one training that I have, which is more of a higher investment, but it's definitely worth it, where I go more into details on every little strategy, is going to be that 7-day FX Master. If you guys haven't seen it yet, it's under the Market Masters Academy, our services. This one is 100% worth that investment to get into it, just because it covers over everything. And I can actually show you guys what that looks like under the 7-day, but it's really, before it used to be called a 7-day intense Forex training, and that's because it is intense. It's not easy getting into it, but with the exact guidance, like it's I actually called it intense because it's like about 2 hours of each of these days in training, around 2 hours. So like this one right here was 1 hour and 54, but it's like so much knowledge that's taught in here, and then there's like the whole homework process, getting into like more learning. So within 7 days, it's possible to go through everything, but actually some people take a little bit longer just because there's a lot of knowledge to go through. Everything's broken down. Everything is just step by step, from the very basics if you're just brand new to getting into more advanced stuff within the days. Fibonacci is actually one of more into like, we'll see, it's on day 5 out of day 7. So there's 2 extra ones. So yeah, it has a lot of stuff, but most of the people that I've seen success with trading has invested into this this training, and the ones that don't give up and continue practicing are the ones that they're expected to get results for sure. It's just a matter of practice, putting in that time, effort, obviously investing into the training. It took me a lot of time into the developing, and just the knowledge that it took me to understand trading. You can tell that everything that I'm talking right now, it's not scripted. It's all from knowledge and past experience, and just from time and time again, seeing how the charts flow and practice from there. GJ right now, retracement, I'm in for a sell on this, but most likely GJ is going to be hitting 38.2 and then reversing down for an aggressive reversal right in this area. Okay, Mamadou said great investment, still go through it all the time. Yeah, it's a training where you kind of have to go through over and over to like fully get it down. I know there's some people that they've like rewatched it 4 times, or they go to a certain section just to refresh their memory on like Fibonacci or Divergence or any of the like Cortis theory, more advanced stuff. But you guys know it pays off with time. It just takes that time and practice to get it down, compounding accounts and working your way up. There's a lot of people seeing results for sure inside of that training. All right, but anyways, that's it for tonight, you guys. Appreciate you guys for being in here. I gave you guys a lot of my time. Hopefully it wasn't a waste of time. I know there has to have been at least one person in here that took this, and it's probably going to change their game up with using the Fibonacci. So thank you guys for being in here. You could see there was people that had left just because it's more on the complicated side. I don't blame them. It is pretty complicated. Awesome. Well, you guys have a great night. We'll be probably up during the London session tonight. There's not much news for London session, but New York session, there is going to be some USD and Euro at the Open of New York. So we'll see you guys there inside of the signals for those that are in there, and we'll speak to you guys later. See you guys.